Live from Indianapolis and streaming across the world, this is Shane with Futures.io, the best futures trading community on the planet. We're pleased to have you here. Thank you for joining us for our 414th webinar event. In under 1 week, on March 1st, you should join us over at Futures.io for the Battle Stations Challenge. The rules are simple. All you have to do is share a picture of your trading desk for a shot at winning some big prizes. We've also got a killer deal on Futures.io Elite memberships. They're 50% off if you post a selfie along with your desk. It's my pleasure to welcome back trading veteran Trevor Harnett. A few weeks ago, Trevor was with us to discuss the basics of market profile charts. This time around, we're going to delve much deeper into the subject, covering more advanced topics like the concept of using market-generated information, contextual use of value areas, one-time framing, single prints, all the good stuff. This webinar is sponsored by Tradeovate, and Bastian Schmidt of Tradeovate is also here with us. They have an Ask Me Anything thread over at Futures.io where you can communicate directly with Tradeovate founder Rick Tomzik and Brian Wise. We will have a Q&A session with Trevor and Bastian after the presentation. The questions usually rack up pretty quickly, so if you have one, I'd say don't wait. Go ahead and type it into the question box to get your spot in line. The questions we don't get to will be posted over at Futures.io in the webinar thread. And as always, this event is being recorded and it will be posted on the Futures.io website and YouTube within 24 to 48 hours. If you've never visited Futures.io, I encourage you to cruise on over there and check it out. We've got a great community. It's an awesome resource. We've also got a wealth of content on our YouTube channel. That's where you can view Trevor's previous video on market profile, as well as info on just about any other trading topic you can think of. Definitely check it out. And while you're there, pound that like button a couple of times, share it with your friends, and subscribe for all the latest updates. And finally, on social media, you can follow us on Facebook and also on Twitter at Futures.io. And now, without further delay, please join me in welcoming Trevor Harnett. Trevor, how's it going?
Good, thanks, Shane.
Excellent. Excellent. Hey, we're really looking forward to the presentation. And with that, I'm going to hand it over to you guys. You're going to get a pop-up to share your screen.
All right. All right, you guys should see my screen.
Yep, looking good here, man. She's all yours.
Okay. Bastian, did you want to read this? Did you want to read the disclaimer?
Yes, let me go ahead and read that, and then you can get going. So let me see here. I just need to. There we go. Minimize something here. All right. So I'm just going to go through the standard disclaimer, and then Trevor, you can start your presentation. So brokerage services are provided by Tradeovate. Tradeovate is a member of the NFA and registered with the CFTC. This is not an offer or solicitation for brokerage services or other products or services in any jurisdiction where Tradeovate is not authorized to do business, or where such offer or solicitation would be contrary to local laws and regulations of that jurisdiction. Futures and options trading involves substantial risk of loss and is not suitable for all investors. Investors should understand the risk involved in trading and carefully consider whether such trading is suitable in light of their financial circumstances and resources. Past performance is not necessarily indicative of future results. All right, I'm done. It's all yours, Trevor.
All right. Well, welcome everybody. Hopefully it was a good trading day for you. It was certainly a wild one, and I'm sure we're all a little bit dizzy or tired or both from this. So I'll try to stay on point, and hopefully you guys can all find some nuggets of value here in our time together today. So first, just quick agenda. I'm going to do a very quick review, not much, of the prior webinar that I did 2-3 weeks back. But the goal here today is really to show you where to focus your attention when it comes to the profile charts. I'm going to show you and explain exactly how I use them personally in my trading, and hopefully show you some things that either you weren't aware of or just add some extra insight into ways that you can apply this information. So I want to again show how I apply them and then walk through some specific setups, and we'll just move on here. You'll see what that means. this is the review. Basically, if you hear me use, I'm not going to be getting into the basics of TPO charts or market profile today. This is going to be much more on the application side of TPO charts. So if you have questions on the basics, or you don't understand some of the lingo or terminology that I'm using, refer back to the first webinar, or it's all readily available, I'm sure, in other spots. But in terms of, if you hear me use the word TPO charts or market profile, I'll use them interchangeably, possibly throughout the day. So I just want you to understand they're really one and the same thing. This is definition I use here. TPO charts are a framework of organizing trading data into a distribution that reflects which prices the market is accepting or rejecting, which is essentially the auction process. As the market moves around, prices up and down, it creates these distributions, and the TPO charts provide a framework to organize that. So that's and really my next point. TPO charts provide a way of organizing the auction. And you're going to see some specific ways to read that information today, and I'll show you how I use it. And it's not that I'm using it super unique or special, but sometimes just seeing some real use cases of how you can utilize the information can add a lot of value to how you do it. I'm not, excuse me, I'm not trying to change the way any of you guys trade. I'm not doing that because I'm not here to say this is the way to trade. But what I hope to do is to show you in a real world way how I use it, and you might be able to take bits and pieces of that and implement it into your plan, your process. So that's what I mean by keeping it simple. So with that said, I'm going to jump right into it, and I want to start with a quote. This is from one of my mentors, Jim Dalton, who's I'm sure if you're a student of market profile or TPO charts, you've read some of his stuff or seen some of his courses or attended some of his webinars. But this is one of my favorite quotes, and it's price advertises, time regulates, and volume confirms or rejects. And that is really the essence of what the TPO charts are looking at: price, time, and volume. And so that's what I'm going to break down here today. So this slide you're going to see a couple times today, and this is kind of what I would say more one of these fundamental slides, and conveys some things I really want you to grasp hold of. And so if you're in this webinar, or if you're using TPO charts, you're a discretionary trader, whether you know it or not. And the word, I looked it up I thought I knew what it meant, but I looked it up for a formal definition. What is discretion? And it's the freedom to decide what should be done in a particular situation. We're all using TPO charts, market profile, because we probably deep down in it resonates with you in some way. The auction process, market generation, it's not a trading system. There's nothing really systematic about it. It provides you a way to gauge what's going on in the auction process and gives you a different view of that as it organizes that market data. And so I use these three bullet points, as you can see: control, regime, and potential. And so this is what we're gonna, every time you see the profile or something I'm describing today, think of these, and I'll show it again. But control, we're trying, as discretionary traders, we are trying to identify the stronger side of the auction. Whether you know it or not, whether you've ever thought of it that way or not, ultimately, as a discretionary trader, you're trying to decide which side of the market should you be on, the buy side or the sell side. And we use the profile to help us identify that stronger side. And a lot of what I want to show today really gets right back to that point, is trying to understand who's in control. And so I'll show this again, but that's a key point when we utilize these graphics. Regime, well, what do I mean by that? Really, what's the market, let's what's the state of it? Is it rotational or is it directional? Directional meaning, is it trending or starting to trend or trying to trend? Or is it really just rotating back and forth, not a lot of direction? So it's very important, I feel, to understand what is the regime that we're currently experiencing in the market. And each day is obviously unique, but you can also have days, multiple days or weeks where it might be in a regime of more of a rotational or directional. And then potential, balance or imbalance. And that, well, when I use the word potential, I'm trying to, I know it kind of goes along with regime, but what I want you to think of is if you sit down at the desk in the morning, you take a look at the pre-market activity. I'd like to encourage you to have an idea of what's the market potential that day. Of course, it can do anything it wants. But if the market's gapping open higher, meaning gapping out of range from the previous day, that typically would offer more potential and would be a sign of imbalance. And if it's opening in range, in value, that would default definitely more towards a balance and limited potential. However, as we saw today, it does not mean that there is not a lot of potential. It just is setting us up for some ways to try to identify which way we should be trading, what regime might fall into place, rotational, directional, and so on and so forth. So this is a key, those are just key mindsets when you look at a profile or even when you really look at any chart, but specifically the profile because it's definitely a discretionary trader's tool. All right, so kind of got this on two sides. One side here is imbalance, the other side's balance. And you see the graphics in the middle of the screen. This first graphic on the left, is really represents more imbalance. And for, well, just look at the general shape for now. You can see it's more stretched out. And there's single prints. And that's what you see these. I'm going to get into detail in this in a minute. But that represents imbalance. It's seeking equilibrium, and it's trying to find equilibrium, and it's having to do so. Price is having to search. Whereas you look at the graphic on the right under the balance category, you can pretty much tell that profile looks like a very normal distribution in terms of shape, and it represents acceptance. It's definitely a market that was rotating and a lot of just back and forth, non-directional. And so those points, I'm not going to go through each one of these points here, but you can see that a market that's on the left here, the imbalance, you're going to see single prints a lot of times. You're going to have breakouts. You might gap open. A gap open would be a form of imbalance, whereas a market that's in balance here on the blue side, you're getting a lot more acceptance at prices. You have a wider POCs or points of control, and the value for the day, which is probably hard to see, but it's this light gray box, is probably overlapping significantly or certainly partially from the prior day, and typically open in range or in value. So I just want to get these things out in your mind so that it's part of how you're viewing the market. And I really have found and just know that a lot of profile traders, these concepts are really key to how they employ these things, these graphics. So let's jump into our first, well, I don't want to say necessarily nuance, but if you want to call it that, a nuance, or it's not so much a setup, but it's a read in the market. And so single prints. So what are they? Well, it's no overlapping TPOs. And so what I've done, the graphic on the right, I've shaded with a red box the single prints. And there was a little bit in here, a little bit of single print action, little gap between G and I. But essentially it's where you've got no overlapping, where you see C and D overlapping a lot here. Hopefully you guys are able to see my cursor. Let me just turn on the spotlight. Right here where C and D were overlapping, those aren't single prints, but here where C, where it broke out above B, that's single prints, single prints, single prints. And you might be like, well, why are you showing us this? You see this. And before I go any further, this profile that you're looking at is split. I'm going to show you how to do that in a minute. But normally your profiles just constantly stack. They rotate around and stack. Here, I have it split because I wanted to make sure you could see the single prints. It makes it much easier to see where they were and how they occurred. And frankly, this is how I view my profile through the day. I may collapse it, but this is how I look at it, because it makes this type of thing real easy to see. Single prints often occur at emotional levels, breakout levels, maybe news events, economic releases, or short covering. But and the endpoints serve as support and resistance. What's the endpoints? Well, right here, where it ended, and then right here. So there's a lot of times it moves real quick through these levels. But let's move to the next slide, because I want you to see why these are important. Okay, so when single prints develop, this is kind of a setup here, or if you really are looking for some key things in terms of how to employ this information, this would be a screen here you can look at. When they develop, in fact, this graphic here on the right was from yesterday. This was the ES. I'm trying to use real fresh information. I could have used information from today, but I put this together last night. But once single prints develop, which right here, see, A and B is the initial balance, that's the first hour. It broke out above the first hour of trade, which broke out above initial balance, and ended up with single prints. The single prints really aren't confirmed until D opens. Once D opens, you have single prints, and they may fill, they could fill, but immediately my mind, and what I'm showing here is this thing is broke out above balance, initial balance, on single prints. And what I'm looking for now is I use initial balance extensions. Basically, I take 100%, and I'll show you how to set this up. I take 100% of the initial balance, so basically from here to here, and just add it on top. And it gives you a target, so it's a price target. And so once you have the single prints develop, let's say if you were purely systematic on this, you would buy the open of D because there's single prints, and your target is right here, the top of this, which when you look at this, you're like, wow, there was a lot more to have, and that's true. It isn't like it stopped on the dime here, and we'll talk about that more in a minute. But I'll take 20 points in the ES any day of the week, from 85 to 05. And so it gives you an initial target. And your risk, this is maybe more important than the price target, your risk would be closing those single prints. And some people might go a couple TPOs below, but the point is, if it closes those up, the idea of a trend day, because that's what these this is what this is representing, becomes minimized, and that's where your risk would be. So it's a nice risk reward. And so I'll show you how to set this up on another screen. But this is a price target. When I see single prints, immediately I think, okay, especially early in the day, this is my first target. And if you trade multiple lots, you may hold a runner for other levels, which we can look at here in a little bit. The point is, when I see single prints, I'm thinking there's a potential for this thing to trend. So let's take a look at the next slide. So here on the left, the graphic on the left, this was again the ES from yesterday. You can see where the magenta colored arrows pointing. That's where the single prints were initially confirmed because D opened. and you can see this the single prints here below. Let me turn on my highlighter again. You can see these single prints, and this is the collapsed version of the profile. It's easy to look now and see where these single prints were, but as the day is developing, if you want to split this out, you just left click on a letter and you'll get this menu here, and I highlighted the one you'd click on, split the profile, and that gives you what you see over here. So you can see singles here, and we had more. But that's single prints and the initial balance extension and showing you what you would risk. I really never want to recommend a trade setup without explaining the risk side of it. That's the most important, frankly. You have to know where you're going to get out before you get in. And if you don't do that, you might want to try that, because you have to have some sort of risk controls, especially in these markets right now with all the volatility and these wide swings. All right. Apparently it doesn't let me advance my slide if I have that thing on. All right, I just am showing this because this is, I don't want to go back and forth into the software right now. I want to be able to just show you. If you go into the chart editor on the TPO chart, this is what you just click add extension, and you will add it, as you see right down here, 100%. You can color it whatever you want, but that's how it'll automatically draw that targeting. And I put these in the presentation because then you can just go back through it quickly and see my settings without having to do a lot of work. Okay, the next one I want to highlight is one time framing. If that's a new term for you, it's really just, it's a way to describe a market that is trending. And what is trending? Well, that's what one time framing is. And if you notice let me turn on my pen again. You see these arrows here, these red arrows. So as this market, initially it was kind of moving around. Again, this is the ES from yesterday. Finally, when C opened, we took out B. This is now beginning to one time frame. It's a higher low, higher low, higher low, higher low, higher low. Finally, an H, it's set back. And what is important here, if H would have only done this one H right here, if it would have just went below G, just one, and then went back up and continued, that would not be considered a break or an end to the one time framing. The stronger a trend is, the more consistent you'll have the one time framing. In a perfect day, an all trend day, which is extremely rare, each half-hour bracket would have a higher low. And so this one actually broke it right here. That doesn't mean it's reversing. It just means it broke the one time frame. It means the trend, the strength of the trend is beginning to show a little weakness because it actually was able to downtick and press below the prior low by a little bit. And in this case, it was 2 TPOs. And then it resumed it here, then it set back, and then it started it again into the close and rallied, ended up closing right near its highs. So that is what one time framing is. Now I'm obviously showing you an up example, an uptrend example. On a downtrend example, it would be lower highs. And I don't got an example of that, but I'm sure you can imagine what that is. That's what one time framing is. Now another important thing is, because I want to say this because we just talked about single prints, is that it does not require singles. Here we obviously have single prints, but you can one time frame without having single prints. However, when we're one time framing and do have single prints, that is just showing you the strength or the impetus or the initiative of the buyers in the trend. So it's kind of a buy the offer type of market because it's moving. It's has a lot more initiative than just kind of a slow grind. So singles plus one time framing is powerful. That's basically what I want. That's why I wanted to bring that up. And on the graphic on the right was the NASDAQ. So I didn't put the red arrows in, but you can see, and I don't want to ask the question because I don't want to take the time. If I did, hypothetically, where's the one time, where would the one time framing be? And you can see C, D, E, F, G, and then H is not. It's set back here. I continued it, but then J set back. So you can see by counting and watching the one time frame, it starts to give you a little bit of an idea of the market's ability to continue the trend. Now it did, but it shows that it is somewhat weakening the trend. It's not moving as quickly, and each bar it's starting to test it more on the downside. But the one time framing resumed here, 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 and here, right into the close. It was very strong last couple hours. Okay, let's move to the next one here. And let me turn this off again. Okay, so this is the slide I showed earlier, and I just want to go back to it. See, this again, I'm reinforcing these. Control, identifying the stronger side of the auction. So just think of that, control. Which side's stronger? So if I go back, now that you understand one time framing, you can pretty much tell who's stronger here. And not just because price went up, but because of what we're witnessing with the one time framing, with the single prints. Those are all very key nuances that you can pull from the profile. And I recommend you do. Those are the things I'm looking for as I'm gauging, because the most important thing for me when I'm trading is to not try to fade or I don't want to get run over. I want to try to position myself in the strength of the move. How do you do that? And I'm not asking you to answer that. I'm just saying, how do you do that? And I use these things, the one time framing and the single prints, to try and put me on the right side. So you might look to buy pullbacks. I can buy the pullback. Or I have different playbook setups. My playbook is my trades, my defined trades, and I have a bunch of them. But I would basically be looking for long playbook setups or long setups from my playbook based on this information. Hopefully that makes sense. Instead of looking for the short setups, I'm only looking for the long ones. Now, it doesn't mean I'm not on guard for a switch in the regime where the market may turn and start the other way, but I am trying to be objective and understand who's in control and not let my feelings get in the way. Hopefully that makes sense. So that's why I wanted to show this slide again. All right, buying tail. I'm not going to spend too much time on these next two slides, but here's why I like this. It's a solid level to risk against. And you could, if you haven't been able to tell by now, risk and risk management, it's one of my strengths as a trader. I know that. But there's a reason it's a strength. It's because I'm very aware of it. And I'm very proactive about addressing it. And so this is a pattern that I look for, watch for, whereby I can use it as a solid risk level. So what is it? Well, basically a buying tail it occurs at the bottom of a profile. Now A is the initial, that's the first half hour. And yes, you can have these during the initial. I like to see them. It's better when they're maybe midday, where the market's trading, breaks hard, and you see a buying tail midday, or it's some other point. But it can happen where we open and trade, and you get this tail, and that low. Here, let me turn on this low underneath of A, just below A would be a really solid level to risk a long against. All right, so it's a form of excess. Basically, a buying tails where buyers stepped in and bought it up. The price was advertised, right? Going back to that quote, price advertises, and it was an attractive price, and buyers stepped in, bought it up. And so I make note here, these are not, again, since we've talked about single prints, these are not single prints because there's no TPOs below the low. Single prints, let me turn on this. Single prints, as you have here in K and L, those are single prints because you've got multiple TPOs above and below. Above and below. Down here, we just have them above. There's no trading below A. That's why it's considered a buying tail. Okay? Hopefully that makes sense. I'm highlighting this because of more of the risk, how you can risk against it. I would be looking for longs in this case until the low is taken out. Otherwise, I'm looking for longs. That does not mean as the market wears on during the day, say I buy this breakout above D, say I get long K, it doesn't necessarily mean I'm risking all the way down to A. But what it does is by having the buy tail, that does give me a direction to trade in. Okay, because I'm not necessarily looking to set huge range on my risk. The risk reward has to make sense. If I'm long K right here, if I'm willing to risk all the way down to the low of the day, that means I should at least be looking for that, like a 1-to-1 risk reward, at least. So I just want to point that out. I don't want you to think that I would be buying K and just willy-nilly set my stop all the way down here and be only looking to take 5 or 10 points out of the trade. Okay. Sell tail. Again, I'm not going to spend much time on this, just opposite of the buy tail, and it's right here. You can see it happens at the top. Okay. This was actually from today. I took this, this was just as the market was breaking down today. I wanted to capture this. This was really a good example of a sell tail today because, as you remember, the market opened right here. Well, hopefully, if you traded the ES, it opened here and it drove higher. It was a pretty strong drive at the open. And then it kind of just started falling back. And then it took out A. And, you know, you can see what it did from there. But this ended up being a sell tail because this is a nice one because it was a strong drive into it and it got rejected. And I'm not saying it got rejected because of what happened, you know, later in the day, but because of it was such a strong drive at the open, and then literally in the very next bracket took out the low of A. That is a classic sell tail, and that would provide us very solid level to risk against on the day. Okay. Now, this gets back to the first graph, well, one of the first graphics I showed on the singles when we were talking about the single prints. And what I want to show here is where you got these magenta arrows, this volume point of control. Now, that is something I use for targets, and they'll serve as support and resistance as well. So if I'm in a trade, I'll use it as a level to exit or take some off. And if I'm not in a trade and the market is approaching it, and I'm in this case, say I'm looking to get short, for whatever reason I'm looking for a short, when it would come up into these levels, these yellow lines, those are levels where I can establish a trade, a short trade, and I may wait to see if we get any acceptance there or rejection and then get on board. But what I wanted to show here, well, before I show, let's VPOC, what is that? It's volume point of control. It's where the most volume traded in a prior day, not necessarily yesterday, just any day going back in time where it has not been traded yet. So this was, this point of control, I don't know if it was from the prior day or what, but the point here is once it traded, this line got shut off. It had now been covered up. And then same with this one. It no longer would continue to extend. So as I said, there's support and resistance levels. I use them as targets, and they're automatically drawn in Tradeovate, which is really nice. I'll show you how to do that. But you don't have to write down, okay, this is a level. It's just automatically going to be on here, and then it'll kind of remove itself once it's traded. But what I wanted to remember, I was talking about this initial balance extension earlier and using this as a target. It is. It's very solid. You definitely, I would definitely be taking some off at that level. And if I was going to keep a runner on, this would be like the next target. This is a level where I would certainly leg out of some more or potentially exit altogether. But what makes this so nice is this market, when it traded up to here, look what we had right after it. We had single prints. And that just is continuing to show the initiative or the aggressiveness of the buyers. It just went right through it. Single prints, continued higher. It did set back here, kind of to that level and held before going up. But I just want to point this out. This would be a target for me in a day where you're having the ability to trend and you're having the one time framing. Because let's face it, we all want to have a target we're shooting for. And if you're just taking the same amount out of a trade, let's say you trade the ES and you constantly are just taking 2 points or 3 points or 5 points, I don't care. But on every trade, your goal is just shooting for 2 points or 3 points. If that's you, I don't want to be too critical of your style, but some trades have so much more potential. Not all trades are the same. Some are, or a lot might just offer that, but the ones that have a lot more potential, you've got to give them room to run, because that's ultimately not every day is the same. As you witnessed today in today's trade, those are the days we need to crush it. And you're not going to do that taking the same amount of profit out of each trade. All right, okay, this is one of my favorites. And so I got this set here for last. I think this is the last one. And it's just a nuance you'll see on these TPO charts, and it's poor highs and poor lows. So this is the definition here in the blue box right here. And poor high, it's where the profile lacks excess at the high, and it's what you see right here. Hopefully you can see on the far right where the magenta colored arrow is. This would be a poor high, where L and M they're the same. They're just stacked up. You don't have any excess. And what is excess? I tried to define it here, but I want to make sure I explain it. Excess is defined as two, not one. 2 or more TPOs at the high or low. Think of it as like a buy and sell tail, or those are forms of excess. So excess would be if M would have continued on and printed here and here, and you have a little bit of a tail. That is that's the excess you want to see. But when you get this kind of action, think of it almost like a double top, or it can be triple top or whatever on your candlestick charts. When you see this pattern, you want to perk up and see potential opportunity. And so it's simply where you get 2, 3, or more columns stacked up. And why is it important? Well, it represents stuck longs or stuck shorts. In this case, I would look at it as potential stuck longs. It doesn't mean they're stuck. The market could continue. But if it's bumping up against it and can't, what I'm recognizing is guys are stuck buying the highs, and they want to get paid. I mean, they want this, they need it to go higher in order to get paid. And so in the near term, the action is much more likely it's more likely that the market tests these guys that are stuck up here and actually rotate lower, which it did here. It moved lower before it might end up moving higher. And so it's called a poor high because it lacks excess. Just think of it this way: you're poor if you don't got excess, right? Excess money. At least that, think of it that way. So at least that's how I think of it. It's poor when I do not have any excess, and poor low when you have this pattern at the low. That's just an easy way to remember it. But what we're really looking for here is stuck long, stuck shorts, and it provides us an opportunity to trade in the other direction. Now, ideally, if you had no single prints and the market had just been rotating, these are great days where the market may tick one TPO up above, and then it'll rotate back down. That's where you're going to have a lot of opportunity with this type of pattern. So poor highs, poor lows. You're not going to see a lot out on this. This is just one of these. It's not unique to me. It's definitely that you'll find some resources, but it's not one that guys constantly focus on. And it's a lot of it's because they don't really, the stuck longs and stuck shorts, if you pair it with that, it makes a lot more sense. And I think you can see the opportunity that it presents. Oh, yes, because risk. I want to talk about risk on this. Again, risk management is key. And the risk management here is it's just above. I mean, if the market starts to move higher, maybe say a couple TPOs up, I'd stop myself out. Maybe 3 TPOs. I'll give it a little bit of room. But it needs to get up above here and show some ability to continue. It might just test. You don't want to just put it one tick above because you're going to probably get stopped out. Give it a little breathing room. It may come up there, test, and then you finally get the break. But just watch that pattern. Hopefully you can find that useful. Here's some examples of it. The ones on the left is the poor high. The one on the right is a poor low. Let's just take a look here real quick. These are 2 graphics. You can see I put the date on there, February 16th and February 19th in the ES if you wanted to go back and look. These are split profiles. I split them out. And you can see, let me turn on my little highlighter again. Here is an open, it tested lower, came back, and came right up to it. And so that would be a poor high. And here, this is one where we get it. It takes it out by 1 TPO. Notice I'm not saying 1 tick. I'm saying 1 TPO. I just let the charts auto scale. I don't overthink this. You can, but you're just creating work for yourself. Let the chart just auto scale and go with it. And that's how I do it. Again, not that I have all the answers, I'm right on everything, but you start to get too granular when you're thinking 1 tick, 2 ticks. Just let the software do the work. 1 TPO. This still represents a poor high because excess is 2 or more. You'd have to have an E here and an E up here. And this is wild because you won't see this too much. This was a day where there's certainly quite a bit of rotation. This was January 26th. Look at this low. It just could not get through it. Kept coming down and just rotate back up, just pounding on this 3840 level. But this is a classic poor low. Now, it doesn't mean at some point you would expect that it's going to break through. And then we look for acceptance below. Acceptance would be 2 time frames. But sometimes it'll single print out, and then you establish single prints, and then the next bracket starts. That can happen. That's a common pattern. But the point here is we're trying to be opportunistic of the stuck shorts because that's what you see right here. This represents stuck shorts. And you might ask me, well, okay, if I get long down here, I've already explained what the risk is, right? It's a couple, 2, 3 TPOs down below is what I would risk. But what's the target? Well, a good target would be half back of the range for that current day, which it ended up in this case being all the way up here. And that's actually where it would have been. So you target up around 50. I don't get too cute with it, but somewhere around half back is where you can take. I would take half the position off for sure. You may take it all off, or you may keep a little runner on to see if we rotate up and do a little repair up in here, test these. Okay. So hopefully that gives you a good idea of how I utilize these profile charts. And I'm not hiding anything. That's exactly how I look at them. It's very, I don't like to use the word holistic, but I'm really trying to read the auction. This is the question I ask myself multiple times a day. What is the market trying to do? And is it doing a good job of it? And when I see single prints, I see one time framing. Yeah, that's a good example of a market trying to go directional, and it's doing a good job of it. So that tells me that's the side I need to be playing for. Again, not that it can't switch and turn the other way, but in the meantime, I have to be objective and let the market tell me what it's trying to do, and then participate in that. And then I like to leave these, just through in these control, this regime potential again, because that's a good way to think of it. Is you're looking at these profiles, trying to identify the stronger side of the auction, then always be thinking, is the market directional? Was it directional yesterday? Was it directional overnight? And then as the day begins, is it rotational or directional? And is it's developing? Constantly trying to keep that in mind. And then balance and imbalance. A lot of times you'll have multiple days where the market sets up in uh, in balance, where you have overlapping price action, overlapping value, and the market's just building time out. It's just building out for a move, a directional move. And so when you can spot that, that can help understand the potential for your trade, risk levels, things like that. All right, I throw this on here because, well, there may end up being questions, but I wanted it to be on there because my settings for my sessions, I use these I color code the letters. I love how easy this is to do. I can just click on a letter and set a color. I set the initial balance, a color, doesn't whatever color you want it to be, but the first hour, the first two brackets, I set a color, and then basically the last hour, you could do the last hour and a half, but basically from 3 to 4 New York time, I like to basically color code the last hour and then the first hour. And then when I look at my profiles, as you see these, you can see, well, this is where the market opened, this is where it closed. It looks like in this one I actually had the last hour in this 15-minute period. But I like that because I can tell then when I look at the profile, did the market spike at the end of the day? That's a whole nother setup I look for. Did it spike? Because I use that as a level then for the next day. Is it accepting those prices or is it rejecting them? Again, getting back to that acceptance and rejection. Always be thinking of that. And everything I've shown is essentially a form of acceptance or rejection. And so if you want to split your profiles into a night and day session, specify the night session first and then put in the day session. And that's how you want to do this. Your profiles will look right. Let's see what else. And then these are my just RTH settings. This is all my settings. Again, I'm not holding anything back here. I just want you to see how I set these up. Other than that, that's what I had. Shane, if you want to open it up for questions or throw them out, I'm more than happy to try and answer them.
Hey, great presentation, man. You did a really good job because as the questions were piling in, you were answering them as they went along. I didn't even have to ask.
That's good.
Yeah, right. Very comprehensive. But we got a couple here, man. Uh, Really good one here, I think. Well, just pretty basic, I think. But does success mark the end of one auction and the start of a new one?
Yeah, you could think of it that way because let me get back to let's get back to like the no, where was it? Let's just say the sell, like this was this morning in the ES. The market opened and went higher. Let me turn on my where it goes higher and then it rejected. Once B took out the low of A, that to me would be now. I was looking for longs early. Once this happened, then I started looking more at the sell side because it had taken it out. And then especially once C opened, we had single prints early in the day with a sell tail after an initial surge higher. This was a really nice setup this morning to be looking for shorts after the first hour. And so the answer to the question is yes.
Excellent. And then as far as like reference levels, I mean, obviously you've got a lot of different things to work with there, but do you typically in your trading reference levels from overnight, or you just carry RTH forward from the previous day?
No,
Or?
that's a great question. In fact, I'll show you guys I have the software open here. You guys see this? You see the software?
Yeah, looks good here.
Okay, so basically I have the ES on this side and I have the NASDAQ on this side. This 15 minute up here and a 1 minute here. Now this is the NASDAQ. But the levels that I put on the chart, and I may have already removed them, but I put on the prior high, prior RTH high and prior RTH low. And then I put the overnight high to the current overnight high and current overnight low, and then the open. So those 5 levels go on my 15-minute chart. I don't put them on my profile chart because I'm basically looking at this with this. You can snap them on the profile chart. You can definitely do that, but those are the 5 levels I reference. The open is very key for me, the opening price and then just the actual first hour. So I'm watching to see what's the market doing on that open. And what do I mean by that? Well, if the market is gapping open out of range, so say it's gapping higher, that's telling me a market's out of balance. And I'm looking to see, is it going to continue higher? Because it's gapping higher, is it going to continue higher? Or the seller is going to come in and take advantage of that? And then so you're looking for a gap fill, and does that hold? You start to look for things like that, because sometimes the market gaps open higher and they just sell it from the start and it never looks back. And so those are key things I look for. And you can use the overnight highs, overnight lows, prior high, prior low as targets. Definitely those are targets. You'll see the market shoot for them all the time, and a lot of times they end up being the turning points for the day. So they're worth having on a chart for sure.
Excellent. So, I mean, pretty much do you just use RTH references or do you use ETH at all?
I use the RTH, the prior RTH, highs and lows. I mean, the current one is it's going to be on my chart. I'm watching it trade, so I know where we are currently. But I want to see like the prior high, prior low, and then the ETH highs. Yes, the overnight the pre-market highs, if you want to think of it that way, pre-market highs and lows. Those I would definitely watch.
Excellent. I know for myself, getting into profile was kind of an evolutionary process. It definitely wasn't where I started, and it's probably not where a lot of people start. I went through all sorts of tools and indicators, chart patterns, you name it. What was your process early on, and what led you to profile?
Well, I started at the exchange, and so I was around a lot of traders at the exchange, the CME, and I was taking classes, I was doing all kinds of stuff, trying to find my way like everybody. But honestly, what pulled me to it was back in the day I had a squawk box service where I'm listening to the market. I was trading upstairs at the exchange electronically on the screen, but I was listening to the S&P pit. I had a guy squawking it to me, quoting the pit to me basically. And as I'm watching this thing trade around, it's pretty clear it's an auction when you hear it quoted like an auction. It's one thing to watch it trade on the screen, but when you hear someone calling out bids and offers, it really does feel like an auction. And that kind of got me leaning more towards the profiles, looking at them, and that's when I really started to integrate them. And I had the pleasure of meeting Pete Stottlemyre, who's the creator of the market profile charts, which is essentially what these TPO charts are. So it was a pretty unique experience the way I came across them, and then the way I really integrated them into my trading. But I can't do without them now. So that's my quick history on them.
Right. I kind of feel the same way after going through all that stuff. What I like is I love how it not only provides, trade location opportunities, but the thing that I've gleaned from it the most is that it just provides an excellent contextual perspective. And it seems like, if people struggle with context, that this is
Yep.
probably a good direction to be looking in.
Absolutely. And it's nice because it pulls you into a little bit larger time frame. So many guys, I think, get focused on scalping on these real short time frames. And I'm not saying you can't make a living on that, but there's a lot of computers scalping against you on those time frames, and it's tough. And personally, I force myself. I want to use these, but I also force myself to use them because it forces my view to be bigger picture, longer term, trying to understand the direction it's trying to go, not all the wiggles that it's doing trying to get there, because it's just there's so much noise that you got to somehow step back and get a little bit bigger picture of it, understand what I showed on that one graphic. What is the market trying to do, and is it doing a good job of it? And this really helps me with that.
Very succinct, man. All right, I think that's about it. Thank you again, Trevor and Bastian, for being here with us today. We really appreciate it.
My pleasure. Thanks for having me, and thanks guys for joining in today on a really busy market day.
Yeah, hopefully be a little more calm tomorrow.
Yeah.
Or maybe not.
Yeah. Who knows?
All right, folks, that about wraps it up. Be sure to join us for our next event on Tuesday, March 2nd with Carly Garner of DeCarly Trading. We're going to be discussing options markets with commodities and futures. And don't forget, please hit that like button on YouTube. Head on over to Futures.io to continue the conversation with Trevor and participate in the Battle Stations Challenge. Again, thank you for joining us, and trade well.